Okay, so this lesson is going to be about the long-term resistance breakout. Today I'm going to walk you through one of the most powerful setups in my personal trading plan. It's called the long-term resistance breakout. And it's a 3-step process. And in the next 2 minutes, I'll run you through all 3 steps, starting with identifying the setup, showing you some real examples, and then learning how to enter a trade and manage risk with this type of pattern. Let's get right into it. Step 1 is to identify the setup at hand. Okay? The key to a high probability breakout starts with recognizing a strong resistance. And asking yourself 3 questions will help you determine the strength of a resistance. The first is, how many times has price rejected this level? Okay, so here's a great example in Lucid that we'll get into in just a minute, where price rejected 6 different times at this key resistance level. The next thing we need to look at is how strong is the volume at these levels of resistance. The higher the volume, the more stocks, the more buying and selling is going on at this price level. The more times the stock is changing hands. And we like to see that at our key level. Okay, and the third thing we want to look at is the duration of time that price has failed to break through this level. This signifies that it's a much more important and noteworthy level if price has traded in between this level for a long period of time. When all 3 of these align, multiple rejections, strong volume, and a long duration, now I know I'm watching something that matters. So step 2, we'll study an example, a real life example here on the chart. We'll start here with Futu, okay? Really just a great example of a strong resistance level here on the chart, clearly shown by a rejection here. Get that a little bit more tight. Rejection right here. A rejection here. And our last rejection right here. Okay. Now, we've got 3 rejections of a key level. Gives it some significance. We've got high volume on this first test right here. Shows that there was a lot of shares that exchanged hands at this level. And then we also have, and why this one really made the cut here is just a prime example to show you. This is something that we know is significant because it's been 4.5 years since we broke this level. I have to scroll clear back here to August to September of 2021 just to find the last time we broke this level. So for 4 years now, we're looking at it today on July 25th of 2025. We have not been able to break this brick wall right here at 125. 130, 125, call it what you will. Okay, now why did we take this trade? Well, let's come back to it in just a minute when we go over step 3 with our entry and risk management. How we took this trade and secured a 5R profit overnight through this ascending triangle breakout right here. Let's get into Lucid, the second example, before we break down the entries and risk management. Okay, Lucid Motors, clear back in 2021 is where we're going to run this chart to. This chart checks every box of our key indicators here. The things that we want to see that line up to this type of breakout chart. We've got 6 tests here from Lucid. 1, 2, 3, 4, 5, 6 tests of this key $29 level, $29 level, without being able to break through. At least half of them happened on noteworthy volume. You know, here's high tick in volume, high ticks in volume. Volume was, nothing stellar right here, but it was noteworthy. There was some there. Volume bar right there, some sellers and buyers taking hands, exchanging hands. And then this one, volume's high. Okay. So boom, we've got 6 rejections of the level check that box. We've got noteworthy volume on the level. That's 2 out of 2, 2 in a row. And then the last thing that we need is a long duration of time. Now, we didn't quite get a 4-year period like we did with Futsu, but we got 5 months. We got 5-6 months here from March 21 all the way to Monday, or to October 21st. That's a significant amount of time where price traded within that range. So we know we're looking at something that's got potential at this point. How do we enter this trade and manage our risk accordingly on these types of trades? Well, I'll tell you what I look for. I look for some sort of higher low, some sort of stair-stepping action into that break. That's the best way to play it, where you can position yourself before the crowd, when you can get in there before the institutions are really taking control of this thing and running it where they want. But let's look at the way that we can trade these, right? Because step 3 is all about execution. Once the breakout is underway, if you've missed it and weren't able to position yourself, there's 2 ways you can enter. The first is on the breakout. If price breaks through with strong volume, I'll enter as the breakout candle closes, but only if I have a tight stop to define my risk. I'm going to play out this chart here on Lucid, and I'm going to kind of walk you through what I'm talking about here, because you'll see how quickly these things can catch steam. Okay, now ideally, in a perfect world, we're never perfect in trading, we try to be. We all would like to think we are, but we're not perfect. When you reach that level, please shoot me a message, let me know, because I'd love to jump on board with you there. We're not perfect. In a perfect world, we'd enter on this higher low right here, this candle right here at October 21. We'd enter on this higher low, and we'd risk the swing low right there of 22, knowing we're only risking 1.5, 2 points to potentially gain a 5-to-1 RR. These types of breakout trades, they simply come with a higher risk to return, and you don't see them that often either, which is part of the reason you have to be super patient when you're trading them. Ideally, we'd enter on this candle, but let's say you miss it, okay? You wait for the breakout. You wait for the breakout candle. There it is. Boom. Huge jump on Lucid from 28 to 39. 11 points in one single day. Let's say you missed it. Okay? Your first possibility for an entry is to enter on the breakout close candle. Now, not every time do you get a 30% candle on the breakout. So this might be one of those where we look for our second entry, which is our retest entry. Okay? If I miss the initial breakout, I'll wait for price to come back and test the old resistance as new support. If it holds and starts moving back up, now I enter there with my stop just below the retest low. Okay? Now let's play it out on Lucid, because we weren't able to get that retest. This thing just got ahead of steam and just went, as you can see there. We weren't able to quite get that retest. So this would have been one of those trades where, you've got to be eyeing this thing for an early position to get in there before the big money's jumping in, okay? So either way, whichever way you trade it, your risk has to be defined. You'll hear me reiterate this in all my videos. I know where I'm wrong on the trade, and I only size in if the risk reward is at least 2 to 1. This type of setup, the positioning is all about getting there before the crowd, not chasing when the move's gone. So let's look at Futsu now and play this example out, because we've seen our 3 touches, we've seen our key level. Why did we take this trade? Well, we took this trade, and by the way, we produced a 5-to-1 risk to return on this one, and we capitalized on 5 units of overnight profit in one day on Futsu. So if you want to capitalize on more trades like this, just shoot me a message in the Discord, comment breakout, and I'll send you my free trading plan, which is complete with setups just like this you're seeing right here that I scan for on a day-to-day basis and have helped me become profitable. But let's get into Futsu. We took this trade right here. Why did we do it? Well, we got a rejection up here. Boom, a quick sell-off of the stock. We tested again. Boom, quick sell-off of the stock. From 130 to 100. 30-point sell-off multiple times. This time, something was different. There was no sharp sell-off, no major rejection. I'd call this balance. Price compressed and consolidated, while volume died off. A clear sign of a stock with some strength, with some true momentum into this break. So, and in the Discord, you can actually catch this video on YouTube where I talked about this setup. I did warn the Discord that the options on this were super weird. The spreads were just super sketchy. So I did urge, Discord members to just take the common shares on this. And truly, that's all you needed to still profit on it. But we liked it right here on our entry with this consolidation. And we liked this ascending triangle, the way price was showing strength with higher lows. And we were completely fine with risking a lower low on this, with buying in right here and risking below this candle of 118, 117. Looking for at least a 3-to-1 RR. Let's play it out, because what ensued in Futsu was just an absolute explosive move, just an explosion out of that breakout. So to wrap things up, this is one of the cleanest, most reliable setups that I've used in my 5 years of trading. It's not flashy, it's not hype, it's structure, volume, and timing. And it works. If you build your trading plan around proven setups like this, consistency becomes a whole lot easier. So that's it, guys. Drop a like, drop a comment if you appreciate this type of content. But other than that, I'll be back with more very, very soon. Thanks, guys.